Okay everyone, welcome to the second video on the channel. Very excited to be making this video. If you guys can recall, in the first video we actually kind of talked about the two types of candlesticks. The first one being a bullish one, then the second one being a bearish one. So bullish we represented in green, price moving up, starting off lower and then increasing upwards. And then the second example, we learned the bearish, where price actually starts off higher and decreases as you go down. And then we actually went into some real chart examples here. You guys got the example to have me showcase bullish and bearish candlesticks right in front of you guys. And we even went ahead and calculated and started the calculations of what kind of determines the size of a candlestick. And that's actually what we're going to go into in today's video, because as you see here, the candlesticks, yeah, right now you understand, you know, one's moving up, one's moving down, but you don't understand what's happening in the candlesticks and why they're a bunch of different sizes. So when it comes down to the size of the candlesticks, we're going to go, so the size of a candlestick, size of a candle equals the movement of price over time elapsed. Okay, so what does this mean? Well, if you recall in the first video, sorry, I got a lot of, why are so many open? Let me just get rid of all of those. Doesn't really matter. So you'll see in the first video, we understand that on a bullish example, price can start off at 0 and then increase all the way up to say 10, meaning this price moved $10 from 0 to 10. So the movement of price was $10. Vice versa, if we had a bearish candlestick where maybe the candlestick opened at $22 and then closed at say $5, it actually decreased by $17. Now you'll see this picture here in front of you, it doesn't do the justice, because you'll see candlesticks, the two candlesticks are the same size, but one increased by $10 while the other one decreased by $17. And on the contrary side, when you actually look at the market in real time, you'll see the candlesticks more so reflect the movement of price more accurately, because you'll see that these bigger candlesticks like this one showcase a larger movement of price, whereas smaller candlesticks like these ones in here, they represent very, very little movement of price. Now, obviously, it's broken down into kind of two things here. One, the movement of price, and then time elapsed, like previously mentioned. You guys need to know how to calculate both. Well, calculate the movement of price. We'll go over time elapsed as well. Time elapsed is much, much more simple because you're actually fully in control of the elapsed time. But when it comes down to the movement of price, all you do, whether you're in a bullish candlestick or a bearish candlestick, is you always take the top number and you subtract it. So you take the top number and you subtract it by the bottom number, okay? Then this will give you the number in the middle. So 10, right? Then the movement on price on this one was 22 minus 5, and then that's going to spit out 17, okay? So the movement of price, you always take the top number subtracted by the bottom number. So I'm going to move into two quick examples for you guys, just like I did in the last video, a bullish example. So I'm going to take this bullish candlestick right here, this one right here, and then I'll take a bearish candlestick, maybe let's just do this bearish one right here because it's nice and clear. I'll do the bearish one first, and let me see if I can find it real quick. Price note, is it this one? Yes. Okay, perfect. So price on this bearish candle opened at $11,706. okay, now it closed at $10,264. We need to calculate the movement of price in this candle, because obviously it looks like a pretty big candle, even next to, like, on the right of the candlesticks are smaller, and then on the left of the candle it's even smaller as well. So we know that this candlestick highlighted, there must be a pretty large movement of price, and you can see that not only in the candle, we can go ahead and calculate it. So top number subtracted the bottom number, 11,706 minus 10,264. This candlestick had a price movement of $1,442. So $1,442 equal movement of price. Okay, let me put comma there. Now on this bullish candle, we know that bullish candles, they open at the bottom. So 11,000, let me put this on this side just so it's out of the way. 11,492 is what this bullish candle opened at, and it closed at 13,016. So what do we want to find out? We want to find out the movement of price in this area in between, similar to what we did all the way on this candlestick over here, right? The movement of price is the area between the open and the close. Okay, so we're going to take our calculator, 13,016 minus 11,492, 1,524. Okay, so 1,524 is the movement of price of this bullish candle. Okay, now what do you guys think, since the movement of prices of these two candlesticks are the same, relatively similar, one's 1400, one's 1500, they look the same size, what do you guys think would happen if we calculated the movement of price of, say, this candle right here? Do you think it would be a smaller or a higher number, knowing that the higher the number corresponds to how big the candlestick actually is? If that rings true, we could probably assume some of these smaller candles here have a smaller movement of price than the two bigger candles highlighted, right? You can go ahead, and I recommend you do this, and I'm actually going to make this a part of the homework. 1 second here. For you guys to go ahead and find 5 different candles and calculate the movement of price. Okay, now we know how to figure out the movement of price now. That was step 1. Okay, now you'll see it's over the time elapsed. So what does time elapsed mean? Okay, so the candlesticks represent orders, and orders are the movement of price, and we view price through orders. Now, orders are showcased in time intervals, and time intervals are of your choosing. So what does this mean? And I know I just kind of threw a whole bunch of nonsense at you guys. That's not important to know right now. You just need to know at this point, each of these candlesticks represent a time interval. Okay, so in the top left of the screen here, you'll see I have a whole bunch of different times. I can even open up this little scroll thingy here and choose the interval I want. You'll see I'm on 1 week. So let me ask you guys, what do you think each of these candles represent? 1 week, correct. So in this week, on this bullish candle, the first bullish candle, price moved $1,400 downwards in 1 week. Whereas in the bullish example here, price increased by $1,500 in 1 week. So although they each had the same amount of time, they each moved a certain amount of price, which corresponded to the size of the candle. Because even these smaller candles, like previously showcased, they had a very, very miniature movement of price in that week of time, right? So the orders weren't moving price as much as they were in these two bigger candles that we had outlined. So I'm going to move into a really quick example, just to give you guys kind of another, I guess, view at this. So let's say here, let me move that to black. Let me go to 20 font. Is this bigger now? Okay, cool. So you have, really, it's not going to go bigger. 1 sec. Okay, so you have a track and field team. Okay, and you have 3 runners. Can I make this like, okay, perfect. 3 runners, 100-meter dash. Caveat is each runner has 10 seconds to finish the race. Okay, so I'm going to draw a super ugly drawing here. This is the field, and then there's going to be 3 lanes. The runners are going to be showcased by X. This is going to be the start, this is going to be the finish, and the finish is 100 meters. Okay, each have 10 seconds to run. So let's start with runner 1. Runner 1, in the matter of 10 seconds, he makes it, say, halfway down the field. Okay, so he makes it to about, let's call this 50 meters. Okay, now runner two sucked. He didn't prepare for the race. He was eating junk food before he got to the track field. He was feeling a little bit sluggish. Runner two barely makes it half of what runner one did. Okay, so let's say runner two pushed 25 meters in the same 10 seconds runner one did. Runner three, he came prepared. He got a good night's sleep before. He was eating properly, training, doing all the right things. He made it all the way to the 100 meters in the same 10 seconds. Okay, so each of these runners had the same amount of time, but each of them covered a different amount of distance, right? And that's exactly what's happening in the candlestick chart. Each of these candlesticks are making up a certain amount of price in the same time interval. Okay, so if I were to go back to the little drawing I made here, and if I were to make these, say, candlesticks here, let's do this. Make this one green, make this one green, and then we'll make the middle one red. Now they're candlesticks, and each of these candlesticks, well, if we look at the example, what do these candlesticks represent? Well, these candlesticks represent 10 seconds of time, but they also represent the amount of meters they ran. Okay, and the amount of meters they ran, or the amount price has moved, strictly determines the size of the candle. Okay, so if I were just give you guys a couple more different chart examples, let's take this bullish candle. Let's compare this week of price to, say, this week of price over here, all the way on the far right. Okay, just by looking at it, which one do you think has a higher price movement? Exactly, the bullish one does. Now, what's funny is that since candlesticks represent orders, and also orders come in during specific time periods, you can actually change the time interval. So let me just actually cut off this time here. This is going to be a little cliffhanger for the video because I'm actually going to get ready to end it. But since candlesticks represent orders, and orders are pretty much shown to you in time intervals, if you change the time interval, say instead of 1 week, I want to go to 2 months. Now all of those orders that we once saw on the weekly, right? All these candlesticks that are on the weekly, we go to the 2 month, are represented in one candlestick. And this candlestick is a candlestick that represents a 2 month interval now. And the movement of price would be, say, the top number subtracted by the bottom number. So 13,677. So 13,677 subtracted by 6,465. 6,465. The movement of price in this 2 month period would be 7,212. But if we go back to the weekly is a different time interval, and more orders are going to be shown on a weekly, which is why there's 1, 2, 3, 4, 5 candlesticks, each with different movements of price within, right? Each of these candles have a different amount of movement of price, but they all make up a higher candlestick's movement of price. Right? It's a little bit funny, but it's something you guys will obviously have to get used to, because at the end of the day, it is a little bit of an advanced concept when you start getting in deeper and deeper, but that's exactly why we're not doing that. From this video here, the only thing you should walk away with is we now have discovered, 1, what makes a bullish and bearish candle, the open and the closes how to calculate price movement and what determines the size of a candle. Movement of price over time elapsed. That will be the end of the video. I am going to link homework down below. We're going to get very comfortable in understanding bullish and bearish candlesticks, calculations of them, getting used to viewing different sizes of them. And in the next video, we are still going to build upon the basics. It'll be another candlestick video. What's going to be nice is that you guys will be introduced to what we call the wicks. But I'll leave that for the next video. Have a good one, everybody.